Okay, so at this point, we'll move right to public comment. I'm not seeing anybody for public comment today. So we'll go ahead, we have the minutes of the April 29 meeting of commissioners. Do I have a motion?
I move to approve.
Second. Okay, it's moved and seconded. All in favor, indicate by saying aye.
Aye.
Motion carries. Okay, today's topic for discussion. We are honored to have the new county treasurer with us. She's going to discuss the state of our current banking relationships and present a matrix of the banking institutions with whom we interact. Looking forward to this. Okay, so coming here, new county treasurer, welcome to our meeting.
Thank you, commissioners, one and all. I appreciate your time. I did send a memo to you along with a plethora of attachments. And what I thought I would do before we got into, I think, the memo and...
When did you send that?
I'm sorry?
When did you send that?
Oh,
It should have been in your finance folder.
Sorry, yes. If someone would, that would be helpful. I'm sorry. Those laptops stuff in my school today.
I apologize. I did send some things electronically, but I printed off because they are all different shapes.
I often get mine electronically, so I'm not in the habit of bringing my plethora with me.
Sorry. Well, the memo more or less outlines some things that I want to talk about moving forward. But prior to getting to that, I'd like to just give you a brief update as to where we are now. And I don't mean to, I hope that none of this conversation is insulting. I don't know, your engagement
To whom?
to anybody, to
Okay.
the commissioners, to any commissioner. I don't know your engagement.
You're the only one who said those words about it, so you're fine.
What your knowledge base is already, as it relates to the banking. So, I'm just going to start a little bit at, Act 72 basically collateralizes, requires us to collateralize funds. There are a number of ways, and some of which are new, that you may not be aware of as to how funds can be collateralized. So it used to be such that you would get a corresponding investment with a bank, and it would be an exact match. You would have it would be a defined match of a security that's used to collateralize your deposit. So if you have a $5 million deposit, they would pledge a specific $5 million security. That moved to a pooling process whereby you don't get that security matched directly. You are part of a pool of all of their governmental funds and all of the securities that they have to secure those funds. And we do have our funds collateralized in that manner. And we also have our funds collateralized in the manner of letters of credit with the Federal Home Loan Bank. So I provided documentation on what that looks like, and it's an irrevocable line of credit whereby if we needed, it substitutes essentially as collateral. So the banks have very large lines of credit with their Federal Home Loan Bank, and by issuing that, they are giving us direct access to that. The reason I'm going into this explanation is simply when we talk about having banking relationships, it's really the bank's ability to give us these documents on a timely basis that are critical. So one of the things in the matrix you'll see is, are they timely supplying documentation, and is it the documentation we need to make sure that we're, that we are secure with our deposits. So I go through all of that to say I feel compelled to be here talking to you about the safeguards that you can feel comfortable with as it relates to the money that's on deposit for the county. Yes, Gary?
That's one question. You mentioned about the transition in practice in regards to collateralization. Was that driven by regulatory changes, or is it just new perspectives? Or
It was regulatory, and I don't know if it was born out of all of the difficulties when things became mark to market during the crash, when all of a sudden you had an investment that there was no market for, so its value was really defined as zero. So pools are maybe, I'm not sure when it all transitioned to this, but I know as recent as 2 years ago when I was in banking, we were using the FHLB letters.
So this has been this way for a little while.
It has. We are seeing it more. We still have banks that will pool the collateral funds, and they'll supply us information on that. So we're collateralizing it in a number of ways. The other method that again we will need to hopefully discuss is if you should invest in a trust such as a pliget or something of that nature. Your collateral is really the underlying securities that are making up that investment trust. So it's not a true pledging relationship, and that, but they are secured in a similar vein and with adequate margin for liquidation. So those are some of the things that on a grand scale are in place and protecting the assets of the county. Additional measures that like functionally, I was reading through a number of annual reports, and one of the top concerns for every bank, and I think probably every municipality, every government entity, is fraud through online, transactions. So I wanted to just let you all know there are several measures that are in place. And first of all, we do have online banking access for our predominant account. The general fund is where most of our money runs through. We conduct banking through a secure banking portal. Our bank accounts all have online token authentication for access. If we are wiring, we have established wire limits with all of the organizations. If we go above those wire limits, it requires specific requests, handwritten with callback authorizations. Wires are required to have dual capacity to send. So one person would input a wire, another person would send it. And if we are working through a bank where we aren't established online, we have other methods with a voice authentication in addition to signature. And it is with different people than are requesting a wire. So those are some of the things that can, we hope, be very good at securing and protecting us from fraud as it relates to online. Additionally, with accounts that have any check writing, specifically the payroll account and the disbursement account, because those are our most heavily check-written accounts, and they're really technically under the guise of the controller's office, we have instituted positive pay, whereby they submit files of the checks that are going out, and only those checks are permitted. In addition to that, that was in place. Prior to my arrival, we added ACH debit block, because the other way that people get at those accounts are to zap it through ACH, so that the accounts that have high check volume are restricted with ACH debit block, and we are placing that on a number of our accounts as well. Plus, there are ACH limits in place to try and protect against that. Currently, we're not using remote deposit, but I haven't ruled it out. It just has to be for the right account, and that is where you basically have a small machine that you run your checks through, and they go to the bank rather than going to the bank. I would love to have the capacity to do that. However, we still deal in cash. Prior to being closed, we have cash coming in from several of the different entities, so we have to physically take the cash. But it may be the right thing for certain accounts to be set up that way. And then The other thing that kind of, we're not using all that much is, we have very limited automatic payments coming into our accounts, because anytime anybody can come in, you can get out usually. We do accept them with the state, but I am hoping to expand it, with online collection of the hotel tax. But it would be specific to a hotel tax account and not the general fund. So those are some of we have additional internal controls in the treasurer's office. We view accounts daily. We are balancing lot to Lawson daily. We have dual control on any deposit. We have involvement with finance on investment tracking and bank selection, so they will know when CDs and investments are coming due and available for investment. And we review all accounts and balance them on a monthly basis with the controller's office. I did supply at the very back a listing of cash, it's a cash balance report that lists all of the accounts that we are responsible for and the bank where they are housed. And that report is shared monthly with the controller's office, and any deviations or differences, we provide an explanation as to why that difference is. And additionally, I provided a Cumberland County monthly investment schedule. It mistakenly said May 2019, it is actually 2020, and we updated it. So, just to give you some idea of the scope and the size and the number of accounts that we're talking about. I feel very confident we have put a lot of things in place to try and minimize any fraud on these accounts. The things that we can't control would be an internal fraud in another department that we're unaware of. Or the treasurer's office is not responsible for every account within the county. The row officers all have their own accounts. So I can't speak to every account. The tax collectors establish their own account. And we have no involvement in that.
Do you know how often those are audited?
I do not.
Okay, even in full audit?
Yeah.
I mean, I know John used to do account on a daily basis of the cash trades.
Yeah.
So, okay, there's probably not a standard because you would be one of those subjects to the
Yeah.
Okay.
Well, like I said, monthly, we're reconciling and being held accountable to all of the accounts for which we manage, but
Yeah,
that,
stuff that's probably on it.
yeah. I don't know if Bob DeGrossa joined, he may be able to, or Mike Clapsaddle may, okay, they may have been able to opine on that. The other thing that, we use a lot of signature stamps around here. And so I would only caution that people really, if they're applying a stamp to a document, that they're actually reading it and looking at those documents for what's happening here, so that
has been an issue in the past, I would say, so
Yeah.
it's a good catch.
And then toward the memo, to where I think we need to kind of think about kind of moving forward, is I supplied a matrix of banks in our market and tried to do a little bit of an analysis on their strength. And we're really blessed. We have a number of really great quality financial institutions with convenient locations for us to use. All of them are well capitalized. I did supply a little capital ratio definition sheet. I don't know if anybody, just because, to try and give it some meaning. But I think it's critical too in this time earnings are gonna be stressed. Their underlying value of their collaterals are going to potentially be deteriorated. I think we're going to see some of these ratios decline, just by sheer, environmental conditions. But I believe that, they are all well above the well-capitalized ranges. And
So for instance, like, commercial loans that fall into default, that's reflected in what you mentioned?
yeah, in the leverage ratio, all of these are are a function of their risk-weighted assets.
Okay.
And so like, as an asset for a bank, they may take your loans and they may say, well, they're only 50% value, but like cash would be 100%. So as they start to look at their asset pool and write down some of the quality of their assets, it could impact this, I believe. And I just am concerned they're starting to really try and pull in some more cash to prop up some of these, just what they think they're going to be faced with, within their portfolios. So, and like I said, I think earnings are going to be a challenge. It's just going to be a challenging time for banks. But I believe, we have a lot of really great conservative financial institutions that should, that I feel comfortable with us continuing to work with. I did try to come up with some categories. We will work with finance to discuss, rating, how easy they are to work with. I used a category, ease of daily banking, and that's simply just for us to get to the branch. So if we can walk there, that's a 5. If we have to get in the car, like walk the block, get in the car, drive through, if it's in Carlisle, it's still a 4, that's very convenient, but beyond that, if the nearest facility is beyond that, the ratings went down from there. And so out of the county becomes very difficult to really have a daily banking relationship with. But we certainly, have used banks out of the county for certificates of deposit and things of that nature.
Is there a role at all, I keep, for a couple of years now, there's been a lot of publicity in the financial press regarding these virtual banks. And some of them have established pretty good reputations, they've got a lot of assets under management. Is there any role for those in public accounts going forward?
Gary, I'm not sure, to be very honest. Even in looking through some of the banks that are on this list, and I tried to address every bank in Cumberland County, several of the banks that I've reached out to just to discuss, like, are you interested in government accounts? I'm not really getting response from. So some of the smaller community banks are still very much in the space and very interested. Some of the larger institutions, either I'm not finding the right person to get to, or they aren't terribly interested in.
And I realize there are very few true Cumberland County banks in that sense, because of the changes in the industry. But in terms of if we're willing to go a little broader, these institutions like Synchrony and Ally Bank, they don't, as a practice, maintain physical locations,
Right.
And a lot of them are paying, multiple times the interest rate on straight savings accounts, and they're paying at least marginally better rates on overnight investments, CDs, things like that. So,
And I'm not opposed to them if they truly have the capacity to collateralize. I've been trying to discern, I've been researching our ability to engage with credit unions. They didn't used to be permitted. I am finding some places in various updates to different codes whereby municipal authorities are able to use them. And anecdotally, we had a return check for a tax collector who's using, a credit union. And Pennsylvania State University is certainly allowed to use a credit union, but I could not find, and nor could the treasurer, the solicitor for the Treasurers Association tell me definitively that counties were permitted to use them. So I placed a call to the CFO of one of the local credit unions, and I've not heard back. I don't know if they're prepared to collateralize in the way that we would be required. But those are some of the things. I think inherently, my feeling is I believe there's opportunity to work with organizations that support the county with branches. Not that they have to be headquartered here.
Still value.
Yeah, but support the county with branch locations and the community in the county, quite frankly. So that there's still a lot of opportunity within those spaces. The one entity that I would like to discuss is Pliget. That is a little different. We have not, previously, the Treasurer's Office has not invested with Pliget. Currently, the way our investment policy is written, it would allow for us to place investments with Pliget. I do think we need to update our investment policy, and one of my requests was to form a committee in order to do that. The last time it was updated was 2006, and there was some pretty substantial changes in Act 10 that would allow governments some additional investment opportunities.
Just for clarity, so you and I discussed this, and I just can't remember, but Pliget, for instance, we're not prohibited currently from using them. It was simply a choice of the previous treasurer not to use them.
Correct. I wasn't clear if the, so Pliget has basically money markets that they manage, and I wasn't clear with what comprised the funds, if that was approved technically under our investment policy. But in fact, it is, the way that it's structured, it is.
And just for the record, Pliget is Pennsylvania Local Government Investment Trust.
Correct, sorry about that, yeah.
When I was investing the money for the Council of Governments, I put all the money at Pliget. They were wonderful.
Yeah. We do have, it's my understanding, Pliget is an arm of PFM. The county has a relationship as it relates to PFM with bond advice.
Yeah, I think our county library system uses Pliget.
Yeah.
That's something that
A lot of the local governments do, and the thing that I think it can offer the county is, for example, right now CD rates are really not good. We're flush with money, they're not good. I began about a month ago looking for alternatives. When banks don't know what the future holds, they're not going to be willing to give a long-term fixed rate. So we are starting to deploy into some money markets and finding some much better rates there. And, you know, as an example, the CD is 25 basis points, the money market is 75. And that's meaningful on, $5 and $10 million. So we are finding better rates in the money market space currently. And I think Pliget would offer also a nice alternative because the way they build their portfolio, the assets are different. And sometimes, they can structure a better earning through that, through agency backs and governmental issuances, so treasuries. So I think that I would very much like us to move to that. We did hold a meeting. I know Dana Best is on the line with finance and some of the folks from the controller's office, and I think the response was positive as it relates to trying to work with Pliget. So, Dana, I don't know if you have anything to add to that?
Yeah, so I think there is a lot of opportunity with Pliget. The way that they're structured, some of our accounts that have transactions coming off of them, it may be an opportunity to put money there and not have to worry about investing. So we would start getting a large balance in like our health insurance account. It could be a very good option for that account.
have been in contact with the folks from Pliget. They would welcome the opportunity to make a presentation if you all felt you would like that, to gain a better understanding before we open an account, or if you all are agreeable, I'll set down that course of, there's an application process, and I did share with Keith, this Brennan solicitor, a resolution, a proposed resolution, should we choose to embark on that relationship. So, I know that was a lot. I don't know if you all have any questions, or
It's good, it's very well prepared, it's a lot of data.
it's a lot of information. My goal was to provide you all with some comfort level that the funds for the county are being monitored well and kept secure, in addition to trying to be invested to obtain the best yield possible safely. And I think there are other opportunities for us in that. I would like to possibly add for the minutes, if I could request approval from you all to open money market accounts with a few organizations that we have not currently, we had other relationships with, but we did not have a money market. So I will have to have a couple resolutions signed if possible, or it can be read into the minutes. With FNB Bank and Pennian, we will open them as we have with all of the accounts, whereby 3 commissioners, the treasurer and the controller, sign to authorize the account. The online access will be granted to only the operational folks within the treasurer's office, and we will not transact payments through these money market accounts. And essentially, we're just shifting to money markets from CDs in a short time frame. So.
Let me ask one question on that, because you were speaking about money markets earlier. And now, money market funds are not FDIC insured.
That's correct. These would be money market funds within local institutions that would be backed by either collateralized pool of assets or the FHLB letter.
It's the same process
Yeah.
of securities. So.
And it's a great point. While I call these money market funds, they're
Yeah.
not like an investment type of a money market
Oh.
fund where it's pegged by securities. It's a bank money market fund.
Oh, yes. Okay.
So
Right.
it's not truly a financial
Okay.
market money. Yeah.
I
market fund.
I knew you would most likely have covered the question of the
Yeah.
collateralization, so I just
So,
wanted to know what it was.
These accounts would be similarly collateralized as the operating accounts are currently. And with CDs, we actually have to collateralize our CDs, typically, I should say, because they exceed the $250,000 limit of FDIC coverage. One option that Pliget has put on the table are brokered CDs, and the group, when we looked at it, for the yield, it just didn't seem worthwhile to place a bunch of $250,000 CDs around when we are able to get, at that time, it was better returns with one large CD collateralized by other means. So
Is that sort of threshold for a more favorable rate? Is there a
it really depends. It depends on how the bank is structuring their assets and assets and liabilities. So I've been really pleased with some of the rates that were being offered, and like I said, and then if some of the other organizations, I remember at a time back in the financial crisis of 07, 08, there were banks that just completely pulled out of the governmental banking business. Rates were so low, they didn't want to have to collateralize. So I was not sure, in this environment, what we you know, but, because there's a real cost to them, to, you know, collateralizing them. And so I'm pleased, you know, with the reception that we're getting by the community banks. And I think we're seeing some very competitive rates.
Your comment made me think of another question, and it's, I have very little understanding of the difference that you were explaining a little while ago of the bank money market versus the investment house money market. I knew they were different, but I don't understand the technicals of that. So here's my question. A number of years ago, the money, just as you were saying with the financial crisis, people got out of government banking. Investment-based money market funds were no longer able to be confident that they would never break the buck, as they say,
Right.
$1 per one share.
Right.
And the yields, you know, plummeted, and a lot of people, myself included, just got out of money market funds. And I'm still going to do it yesterday because, you know, I've been watching the last 3 years by the bank. So does that threat, that break the buck threat, apply equally to both if we would have, for instance, more financial institutional problems as a result, you know, a year from now or even further down?
Yeah, I can't speak to being an expert on the investment side, but as the banks going into this crisis are so much better capitalized than they ever were previously. So they have very deep pockets right now to be able to withstand some serious shock.
Okay.
So I can't see whereby their money markets are truly vehicles to provide for, it's like a non-penalty CD. It allows, and because of some of the restrictions on the account, it's not backed by other assets, it's backed by the bank's assets, I guess, technically, and what rate they're willing to pay for those deposits. They're truly deposits of that bank, and they're just paying a return because the money market, you can't write a lot of checks off of. It has those restrictions, you know, it's like 3 checks a month or 6 total transactions. We will not be making transactions, so we won't be up against any penalty or violating of that. We will most likely pull off the interest monthly to allow us to track the principal that we have at the various locations. We do that with CDs. We don't track the interest until we're paid at the end of the CD. So we are monitoring it in that way. But the breaking the buck on the other side of the investment, I don't know if that could happen again. You know, but as banks relate, I don't see that as a concern. You know, we're really lucky. We've got a lot of really strong financial institutions. And I think they're going, like I said, they're going into it. And I think they're also being very aggressive about how they're identifying the risk, and, you know, preparing for that.
Is it just the bigs, or is everybody?
Everybody.
That therein lies part of the problem, is that, you know, the lending is not necessarily getting where it needs to go in the current crisis environment. So there's a lot of.
They were all working feverishly on the PPP loans.
Yeah.
And I know that hopefully that will help a lot of people, but I'm not so sure the regular lending, you know, how that's all going to play out after this. But, any questions or anything that I haven't answered, or?
Can we discuss the banks?
Yeah.
Do you see any on there that maybe we shouldn't be dealing with?
No, Vincent, I was really pleased. I mean,
Okay.
even though they're all in, you know, of different sizes, it just is a matter of if they want to be in governmental space or not. And you know, BB&T just bought SunTrust a bit ago, and they merged, and so they got substantially larger. I haven't been able to navigate someone in a government space there, even though they have locations with us.
Just alluded to something I was gonna ask, which is, you know, we've seen a tidal wave of consolidation over the last 10+ years in commercial banks. Is that largely past, or are we gonna be looking at an even smaller list in a year or so?
I hope not, on some level, because I feel like, I shouldn't speak for my banking friends, because I haven't spoken with them about it for over a year. I mean, acquisition was very much the name of the game 2 years ago. Banks were still, they were well capitalized. If they were capitalized well enough, they were acquiring. I think what will affect that, Gary, will be how badly all of this hits their capital ratios, because they will be restricted from buying if they don't have adequate capital to do so. And, you know, I think they're going to be focused internally. Now, that being said, if there are weaker, smaller financial institutions, they may willingly put themselves up for sale.
Right.
That can't make it through these capital.
And we're all united for it, actually.
Exactly,
But
yeah.
I will say, since someone reads financial trust regular trust, there is a lot of news that centers around the whole idea of mergers, and I can see there being some criticism of banks buying other banks in an environment in which we are in which many people feel their emphasis should not be on growing themselves, but on making loans to businesses that need it. So I'm on my own level, I'm worried about the criticism that comes to the banks, followed by regulatory action, by the optics of a situation in which banks may be appearing as if they are focused on their own business operations rather than on.
Yeah. And when I was reading through the quarterly, the annual reports and then some of the first quarter, and this information was taken from 2019 annual reports. In the quarters, you could see where they were clearly starting to put money into reserve and focus. I think they're just very focused on getting through this time period. A bank such as BB&T and SunTrust, I would think that they're still working through, the dust has not settled yet on that. So an FME has purchased, they purchased something, I think it was in the Carolinas. I think there have been, like you said, a lot of mergers that people are still probably working through. And I have not heard of, smaller, I'm out of that loop a little bit now, as smaller banks would put themselves up for sale.
I was just wondering if there's any rumblings regarding any of the banks on this.
Yeah, no, and I was really pleased, like when I went through and read, it's astounding, like the litigation, but like, I know Wells Fargo was such they're still working through a lot of the issues they had, their matters, I had on here their matters of 2016, they seem to have worked through that, but they were not fully outside of regulatory scrutiny as of last year. I think the banks that continue to be incredibly strong, I mean, if an opportunity arises, I would suspect that they would buy it, but, buy a franchise if they saw one that they like. But I'm not sure this environment is,
Nobody knows.
not right now. Yeah. But it could be at the end of the year. I don't know. So we're really lucky in Cumberland County, I think.
In many, many ways.
Yes, we are. Yes, we are. So, just checking here to make sure. So my suggestion really was to kind of do this on an annual basis, have your agreement that any of these institutions would be acceptable to work with, provided we are receiving the collateralization as is necessary. And then subject to them meeting our criteria of providing the information on a timely basis, and things that I have laid out. If there's any other criteria that you would want to add to this type of an evaluation on an annual basis, please let me know.
You had said something earlier about asking action to allow for an opening. Do you need that today? Are you looking for that today?
I would, I do have a couple, I have two resolutions for, FNB to open a money market and Penny and Bank to open a money market at those two locations. Again, these are bank money markets, that will be collateralized.
Right. We do not have copies of those resolutions, but I've seen.
No, I apologize,
Seen it as a standard.
yeah, very
resolution.
standard. I did ask Keith, I don't know, is Keith on the line? Okay. I did ask Keith, if there was a standard resolution that had been used in the past, but I cannot find one, so.
Has he seen those?
I'm sorry?
Has he seen the ones that you have?
He has not seen this, he saw it, I did share with him, this is actually more like a bank signature required.
Oh, okay.
So, so if I can read into the minutes that you all have agreed that opening it is okay, I think that in lieu of a resolution is acceptable.
Yeah, kind of informally. Does anybody have difficulty with that?
I was just wondering if we might, could we do this tomorrow at the workshop and then have time to look at that in the meantime? I just throw that out there.
You can, it's, the banks that I have the documentation for to open the money market, we currently have investments, we
Are there-
currently have investments with.
Are we talking dollars here or just the approval to let you proceed?
No, the approval to actually physically open the accounts, to put investment money in
Is there a
there.
minimum deposit required to open the account, or are you just opening the account?
We are just, we are opening the account and we would like to fund it. So Penny and, not as urgent, but FNB, we would like to
Well,
fund.
To Vince's question, if there's, we have 24 hours, is that gonna be a problem?
I don't think it should be.
I think just as a practice, it would be good if Keith took a look at those and make sure there's nothing unusual.
And these are actually the, it's a signature card agreement. It's not a.
Pretty standard.
Yes,
Yeah.
it's just the signature card and an authorization,
And those are not debatable. Like,
Yeah.
We won't be able to change those.
yeah. If I could get, I'm happy to give it to you, I would, if possible, I would like to fund the FNB account, today, if possible. It's,
I personally don't have an objection to it, but,
Okay.
you know, it's,
I'm sorry, it's a signature card, I'm happy to give them to you, and, it is the exact, authorization and signature card that was executed for our other accounts at FNB, which is the MHIDD.
I have no problem with it. If everybody else objects, then I think we should hold, but I personally am okay with it. Everybody else says
I'm
object.
okay with it also, and we are in a public meeting,
Yes.
so, I mean, certainly it doesn't have to wait for, the commissioner's official meeting.
Correct.
So just as a reminder, we currently have an account, AFDC, Office of Aging, MHMR, and the hotel tax is currently with FMB. And this documentation is identical to that. Keith had, I don't want to speak for him, he had mentioned though, I guess when he didn't really see the delineation between a checking account or money market as much, if we've authorized that checking account, he did not think it was a stretch
Yeah.
to have a money market at the same institution, so.
Cindy, do you know if he's still here?
I don't believe he is.
I just feel a little, sorry, a little funny without him looking at it.
Okay.
But,
I think
no,
he would have
you want-
reviewed this same documentation when
Yeah.
those accounts were opened.
But you're looking to do something today.
I would like to,
You're just looking at the
Yes.
signatures.
Yes,
and
the
signature part
signatures.
that allowed to take place.
correct.
We already have accounts with them.
Correct.
In the past, whatever was required resolution-wise to identify those banks around
banks today that you are agreeing. I really would like to have your concurrence to open a secondary money market at FME, in addition to the checking account that exists there,
So
so
we're dealing with these banks already.
we are, correct. And,
I feel better with what Jerry said, so.
Okay.
Okay.
yeah, sorry if I
And
was.
other than we have to go to signature cards, I don't think we really gonna need our permission.
I don't think so. He didn't seem to think as much that I did, but I wanted to.
Yeah, he's a stick in the mud.
I think he felt it if you have a checking account, and
Yeah.
this is like a checking account at the same
Kind
time.
of like an administrative function.
Yeah,
Yeah,
it is,
exactly.
yeah.
Yeah, I'm fine, I think we can pass that around here.
Okay.
Sign.
Very good.
And what all signatures are on those? It's you, I guess Andrew.
It's, yeah,
As a backup.
operationally, we do put the deputies of the treasurer's office on to be able to conduct
Okay.
business, but that is in addition to actually, wire or do things, it requires the 3 signatures of the commissioners, the controller, and the treasurer on one of my assigns. We just functionally, move the money then, in the backside of that, so.
I think we can just sign those after we finish up.
Okay, wonderful, thank you. Sorry for that long.
No, that was actually really interesting and probably we're overdue to get that kind of.
I'll say, I appreciate it.
So, thank you.
Okay, and you have nothing else?
I have nothing else.
Okay, very good.
Thank you, Bill.
Thank you.
We'll move on to item 5, other business. Is there anything else we need to address?
I have much.
No? Okay, if that's the case, I'll entertain a motion to adjourn.
So